Welcome to my YouTube channel. My name is Ryan Banks and my channel is about financial tips and tricks that you can bank on. And I post videos every second Monday at 5 p.m. Eastern. So today's video is about the second part of an RRSP or Registered Retirement Savings Plan. And this video is going to touch on the rules surrounding withdrawals and with a couple of exceptions. So the first time homebuyer plan and also the lifelong learning plan. I'll be also going into RRIFs, which is a Registered Retirement Income Fund. So when you hit a certain age, your RSP turns into a RRIF. So if you haven't watched my previous video, I would suggest for you to go watch that because some of the terms I might be saying in this video, I've explained in my previous video. So let's jump into the video. The first thing I want to talk to you about today is the general rules of taking money out of your RSP account. So anyone at any point can take out money out of their RSP account if they've contributed in the past. But I would suggest for you to wait until you retire for the following reasons. Number one, you get taxed right away for that tax year and you don't get to delay paying those taxes until you retire. Number two, when you take out money out of your RSP account, you'd never get that room back. So it's the opposite of a tax-free savings account where you get that room back the next calendar year. And number three, you're going to be taxed at a much higher rate because we can assume currently you're working, which means you're going to be in a higher tax bracket compared to the tax bracket that you would be when you'd retire. Therefore, you'd pay more taxes for the same amount that you take out. And the last rule I want to talk to you about is when you do take out money out of your RSP account, there are some withholding taxes, which means there's a certain percentage that the government keeps paying towards your income taxes for that year. So that percentage can go up to 30%, and that amount increases if you take out more money. Now I'm going to go over a couple of exceptions with RRSP withdrawals. So the first one is the first time homebuyers plan. So what that is the government allows you to take out money out of your RRSPs tax-free if it's the first time that you buy a home. So you can consider it as like a tax-free loan or an interest-free loan on yourself or on your RSP account. So when you do take out money, there's a maximum amount of $35,000 that you can take out, and you can't take out contributions that you've put into your RSP accounts for the last 3 months. So they need to be at least 90 days or older of contributions. So because I said it's a tax-free loan, you do need to repay that amount. So you have to start repaying those amounts 2 years after the day that you withdraw it, and you have 15 years to repay it. So the next question you might ask, well, how much do I need to repay of the amount? So you need to pay at least 1/15 of the amount that you take out, but there's no structured plan. So you could pay it one lump sum if you want, or spread out in 3 different payments, however you want it, but you need to pay at least 1/15 of the amount every year without having any penalties associated. So the other thing that you need to take into account is when you do repay that tax-free loan, you need to specify that you're repaying that amount into your RSPs and it's not an RSP contribution. So when you do repay your tax-free loan, you don't get a tax benefit because you already had that tax benefit when you contributed that amount in previous years. The second exception I want to talk about RRSP withdrawals today is called the lifelong learning plan. So what this is the government allows you to take out money out of your RRSPs to help fund your post-secondary education. So this only applies to you or your spouse, but not for your kids if you're eligible. So the one rule that you need to know is you can only take out contributions once per year. And similar to the first-time homebuyers, for the repayment plan, you need to start repaying those payments the next calendar year, but within the first 60 days of that calendar year. And you have 10 years to pay it, so the minimum payment amount is 10% or 1/10 of the amount that you take out. So the other thing that you need to take into account, like I said in the first-time homebuyers plan, is when you do repay that amount, you need to specify to your financial advisor that it's to repay the amount that you took out and it's not a contribution. So you won't be getting a tax benefit because you got that in previous years. So this program is not really popular, I would say, because most people don't make RSP contributions when they're in high school before they go to school. This is more for people who are 30 plus years old who haven't had the chance to do post-secondary education or want to advance and get more education. So with that being said, I am not saying that high school students are or should be contributing to their RSPs because they're in a very low tax bracket. So I don't think it would be very advantageous and wait until they're in a higher tax bracket when they start working full time to make those contributions. The last thing I want to talk to you about today are registered retirement income funds, or for short, RRIFs. So at the age of 71, your RSP account automatically gets transferred into a RRIF. So now you might ask yourself, what's the difference between an RSP and a RRIF? Well, an RSP, you could consider it as your retirement investment account, and your RRIF, you could consider it as an automatic withdrawal of your retirement investment accounts. Now you can see on your screen the 2022 minimum percentages to withdraw from your RRIF. These percentages changes or vary year to year depending on your age, and these percentages and the whole table changes year to year, so you need to watch out for that. So I'm going to give you an example. If I'm 70 years old for 2022, I need to take out a minimum of 5% of my RRIF. So if I have $100,000 in my RRIF, that means I have to take out a minimum of $5,000 in 2022. So if I do decide to take out only $5,000, I can choose to take out that money out of my RRIF in any type of payment schedule. So this means I can split up that $5,000 in biweekly payments, monthly payments, quarterly, or however often I want to receive that money, as long as I take out the minimum amount for the year, which is $5,000 for this example. The last thing I want to talk about today is if you unfortunately pass away, your RSPs or your RRIFs would be transferred to your spouse. But if your spouse passed away before you, then it would get either transferred to your financially dependent child, which needs to meet specific criteria. But if not, it would get transferred into an estate where you would have a beneficiary. And the beneficiary would need to be chosen before you pass away. And all of those amounts into your RSPs or your RRIFs would be taxed. And if you want to give certain amounts to your family as inheritance, they would only receive the after-tax amounts. So that's it for part 2 of RRSPs. So today I went over the general rules of RRSP withdrawals, and I went through a couple of exceptions for the first-time homebuyers plan, as well as the lifelong learning plan. I also went over the general rules that you need to know about RRIFs. So let me know what you thought about the video. If you want to give it a thumbs up or a comment, and if you have any questions, I could definitely help you if you write them in the comments. And if you want to subscribe, you'll be able to get a notification whenever I come out with my future videos. So I hope everyone has a great day, and we're going to see each other in a couple weeks.